Okay guys, so as we move on to the performance management, I personally think that you as a student should revise the basic costing, because there are terminologies which we have studied earlier, but generally what happens is that we tend to forget those terminologies. So I believe it's very important that you should know those terminologies. So I'm going to start off and I'm going to quickly recall the terminologies which you should know as a student when you are doing the performance management. So one of the terminologies that I would like to go about is the concept of a standard cost card. You do know this thing, that when it comes to a manufacturing organization or when it comes to a service oriented organization, as an organization what you want to do is that you want to establish a standard cost for your product, you want to establish a standard cost for your service. Means that whenever we are going to produce a product, this is the cost that we are going to incur. Whenever we are going to render a service, this is the cost that we are going to be incurring while rendering the service. So that's something that you should know as a student, Now, so basically the standard cost card has got multiple components, and whenever we go about with the standard cost card, a standard cost card of any product would actually look like this. Now what do you mean by standard cost card of a product would look like this? It would read that direct material, that maybe let's say a product consumes 10 kg of direct material at let's say $3 per kg. So that means $30 worth of direct material is being used. Similarly, when we talk about the direct labor, so what could possibly happen is that maybe let's say 5 hours of labor is being used in order to manufacture this product, and the hourly rate that is being charged by the labor is let's say $10. So that means $50 worth of labor is applied to this product. Then maybe there could be some direct expenses, let's say $10 worth of direct expenses that are incurred in order to manufacture this product. So resultingly what would happen is that the $30, $50 and then $10, resultingly what you would have is you would have $90 as the prime cost. So when I talk about the concept of prime cost, the prime cost actually means the direct cost. I repeat, the prime cost actually means the direct cost. Now, so the standard cost card tells us that if you are going to manufacture a product, what is the standard cost that you are going to be incurring in order to manufacture this product in terms of material, in terms of labor, in terms of other expenses. Then what actually happens is that we add up the overheads to it. And what do you mean by overheads? The overheads actually mean indirect cost. The overheads actually mean indirect cost. Now what exactly do you mean by the overheads? So there could be the overheads which could be the variable overheads, it could be the fixed overheads. Those overheads which are mainly production related. Those overheads which are mainly production related means those that are incurred related to the production are actually capitalized as part and parcel of the cost of the product. So maybe you could have the variable overheads which might be absorbed on the basis of labor hours, and you could say that it is $5 per labor hour, so that makes it 25. Maybe you could have a fixed overhead which could be absorbed maybe on an arbitrary basis, and you might say that $15 of the fixed overheads are absorbed. So as a result of this, what would happen is that $130 is going to be your total production cost. I repeat, $130 is going to be your total production cost. And when we would have this $130 as a total production cost, so as an organization you could have different ways of incorporating the profits. A lot of organizations, they go for adding up the markup. Markup means a certain percentage on cost. And a lot of organizations, what they do is that they try to achieve a certain margin. So as an organization, what you would do is that you would try to go for some markup, or you would try to go for some margin. That is something that you would try to go for. So when you are actually going to go for this, resultingly the standard profit per product is going to be incorporated. And when we talk about the standard profit, let's say I'm saying a profit of $70 per product is incorporated. So we end up getting $200 as the standard selling price. Now, what have I done? I've simply recalled the concept of a standard cost card, because as you would go about with respect to the concepts in the performance management, So you might actually have to come across this terminology of the standard cost card. So it's a quick recall of what a standard cost card is. Now, as you know, the development of the standard cost card in any organization is by virtue of the introduction of a standard costing. Standard costing is standardizing the cost of manufacturing, is standardizing the cost of delivering service, etc., etc. So when we talk about, I repeat, when we talk about the concept of this standard, there are different types of standards that exist. What are those different type of standards that exist? Let me just take you through. The number one of them is basically a standard which we call as attainable standard. Now, what do you mean by attainable standard? A standard which is attainable means it is based upon the realistic principles. A standard which is set, a standard cost card that is made, which is set on a realistic basis, is considered to be an attainable standard cost card. Secondly, number two is with respect to the basic standard. Now, what exactly do you mean by basic standard? So the concept of this basic standard is that when we talk about any specific organization, generally the organizations would like to have a standard being developed which is going to be in place for many years, like 10 years, 15 years, 20 years, that okay, this is generally how we produce, this is how we would actually manufacture a product. So a basic standard is something that is in place for the long term. I repeat, a basic standard is something that is in place for the long term, that is considered to be a basic standard. And then you talk about the current standard. Like for example, at times what happens is that there could be a situation where the current circumstances are a bit different as compared to the circumstances that are generally prevailing. What do we mean by this? Let me guide you something about it. When we talk about the current circumstances to be different, like it was in the COVID days, the circumstances were different as compared to what the circumstances would have been in the normal situation. So when the circumstances would have been different when it would have been in the normal situation, so you would be required to have a specific standard set, keeping in mind those circumstances, keeping in mind those difference in the operating circumstances. So current standard is basically that is adapted to the current situation. That is adapted to current situation. And lastly, we talk about the ideal standard. What do we mean by the ideal standard? So when I talk about the concept of ideal standard is something that is apparently unrealistic. That is something which is based on the ideal environment, on the ideal circumstances. Like for example, let me guide you. When we say there are 24 hours in a day, 8 hours a day you sleep, 8 hours a day you work, and 8 hours a day goes here and there. So does it actually happen this way? The answer is no. Even when you are at work for 8 hours a day, you don't work for exact 8 hours. You spend time, you waste some time, there is some time which becomes naturally idle. Like you might have to go for restrooms, you might have to go and have some food, you might have to answer some calls, you might have to go and meet up somebody, etc., etc. There are going to be multiple stoppages. So it's not possible that anyone who is at job for 8 hours would do nothing except for the job aspect for 8 hours. It's practically impossible. It's probably going to be the case that maybe 30 minutes, 40 minutes, 50 minutes, or even 1 hour would be spent here and there, and naturally you would have a net time input of approximately 7 hours. That's not ideal. Ideal is 8 hours. I do conduct trainings, and when I do conduct trainings, the training duration is generally standard to be 8 hours. But you don't get a 8 hours training. You don't spend 8 hours or 9 hours for training. Like if it's a 9 to 5 training, so what happens is that 9 to 5 actually means that 3 hours in the morning, 5 hours in the afternoon. So that makes it 8 hours. But that 8 hours training is restricted to 6.5 hours or 6 hours 20 minutes. Why is that so? Because when you undertake the training in the morning session, you spend 2 hours, and then or maybe 1 hour 45 minutes, then there is a 15-20 minute break, and then you spend 1.5 hour, and then is approximately 45 minute to 1 hour break, and then you spend 1.5 hour, then there is this 15-20 minute break, and then you start off and you spend or you complete the rest of the day. So that's how you end up having 1.5 hour of break on an 8-hour day when even you go for the training, right? So that's how things are. So ideally standard says 8 hours means 8 hours, but practically this is not attainable. What is attainable is 6.5 hours, 6 hours 45 minutes, that's what it is. So one of the terminologies is to know the standard cost card. Now let's move a bit forward and let's discuss further. The next aspect is to have a quick recall of the absorption costing technique. Now when we talk about the absorption costing, let's just try to understand what an absorption costing is. So basically whenever we have got the overheads, you know what the overheads are. Overheads actually mean your indirect cost. The indirect cost could be your electricity. The indirect cost could be your separate other utilities. The indirect cost could be your supervisor's salary, etc., etc. That is all gonna be considered as your indirect cost. So when you have got the indirect cost, those indirect costs are considered to be overheads. The overheads could be production related. The overheads could be non-production. What do we mean by overheads to be production related and what do we mean by overheads to be non-production? So production related overhead means what? Production related overheads means that these are the overheads that are pertaining to the manufacturing side, to the factory. That's what it is. Like you have got the factory rent, you have got the electricity of the factory, you have got supervisors who are operating at a factory, etc., etc. This is all gonna be considered as what? This is all gonna be considered as your overheads, which are the production overheads. So there could be production related overheads and there could be non-production related overheads, like the cost associated with marketing, the cost associated with the admin, the cost associated with the sales department, etc., etc., etc. They could be considered as your non-production overheads. Now the production related overheads become part and parcel of the product cost, that is, they are included within the cost of the product. Whereas non-production related overheads are treated as a period cost. What do you mean by treated as a period cost? So when you say sales, when you say cost of goods sold, there is this gross profit. So after the gross profit, what would happen is that after the gross profit, you would say the other expenses. So when you have got the other expenses that are being shown, this is actually presenting the expenses as a period cost. So I repeat, when you show other expenses, that's actually presenting the expenses as a period cost. So when we talk about product cost, period cost, the concept of period cost is that it's just shown as an expense in the income statement. So the overheads which are treated as product cost, what do we mean by this? We simply means that these overheads are incorporated into the cost of the product, right? Now how do we actually incorporate these overheads into the cost of the product? So that is majorly through the absorption costing. I repeat, that is majorly through the absorption costing. Now when I talk about the concept of absorption costing, so always remember that what we do is that with respect to the absorption costing, we try to calculate the overhead absorption rate. What do we try to do? We try to calculate the overhead absorption rate. What do we mean by overhead absorption rate? So with respect to the overhead absorption rate, what happens is that you have got the budgeted overheads and you divide it by the budgeted capacity. You have got the budgeted overhead and you divide it by the budgeted capacity. What do we mean by having the budgeted overheads dividing by the budgeted capacity? So you know this thing, that the budgeted overheads is the overheads that are expected to be incurred, and the budgeted capacity could be on the basis of, I repeat, the budgeted capacity could be on the basis of your labor hours. Means what happens is that the total number of hours that the labor is expected to input, like maybe you could say that our labor is expected to input 100,000 hours during the month. So maybe you could absorb the overhead on the basis of this 100,000 hours. Maybe it could happen is that you could say that the machine hours, like at times when the organization has got production which is machine intensive. So as an organization, you don't go for the labor hours, you rather go for the machine hours. You absorb the overhead on the basis of machine hours. At times the organizations, they operate like this, that They are more focused towards production, they are more focused towards output. Like the organization would say that we have a capacity to produce 20,000 units in a month, things like that. So what is actually going to happen is that, so as an organization, when you think that there is 20,000 units that you could produce, so that's actually termed as what? Units, number of units as a capacity. And lastly, at times what happens is that you could have the overheads being absorbed on the basis of material costs. Like you could say that, okay, what is the amount of material that's being used? We are going to absorb the overhead on that basis. So there could be multiple things that could happen. So when I talk about the concept of overheads, I repeat, when I talk about the concept of overheads using absorption costing, so you know this thing, that the overheads are absorbed on some reasonable basis. What do you mean by reasonable basis? Means not, you would rather say that overheads are absorbed on the basis of, on an appropriate basis. Like if you are labor intensive, on the basis of labor hour. If you are machine intensive, on the basis of machine hour. If you are focused on number of units, it's on the basis of number of units. That's how things are. So basically, this is what the concept of absorption costing is. Now, when we talk about the absorption costing, there is a very important concept, very important principle with respect to the absorption costing, and that's the over-under absorption of overheads. Now let me just guide you what do you mean by over absorption of overhead, what do you mean by under absorption of overhead. Let me just guide you something about it. Let's say what happens is that your budgeted overheads are 500,000 and your budgeted labor hours are 100,000 hours. So what happens is that the overhead rate that you are going to calculate is 500,000 divided by 100,000 gives you $5. The overhead rate that you are going to be able to establish is $5. Now what next is going to happen? Let's assume the actual labor hours is 107,000 and the actual overheads. I would create two situations. I would create situation number 1, I would create situation number 2. I would say that the actual overhead is, let's say, 520,000. I would say actual overhead is 600,000. So what would actually happen is that when you would have the actual overheads to be 520,000 and 600,000, what is going to happen next? Next thing is that you would say we need to now calculate that how many overheads have been absorbed. What have been the absorption of the overheads? So when you talk about the overheads being absorbed, so you know this thing, 107,000 hours is what we have worked for. $5 was the rate. So when you have got 107,000 and $5 being the rate, so how exactly are you going to go about it? You're going to say 107 into 5 gives you $535,000. So the actual overheads were 520,000, whereas the overheads absorbed are 535,000. So when you have got the actual overheads being different, the absorbed overhead being different, so this 15,000 is going to be considered as your over absorbed overhead. Similarly, when you have got the actual overhead to be 600,000 and if the overhead absorbed, I repeat, the overhead absorbed is 107,000 into $5 again. It's gonna be 535,000. So you would say that this is gonna be the under absorption of overhead. What is it gonna be? It's gonna be under absorption of overhead. 600 minus 535 gives you 65,000 as the under absorption of overhead. 65,000 as the under absorption of overheads. What is it gonna be? Under absorption of overheads. Now try to understand something, what's gonna happen. So I told you that there is something called over absorption, there is something called under absorption. Now, this over absorption means you have absorbed more. So you treat the over absorption as income and cost of goods sold. When we talk about the over absorption, so it's actually treated as an income in the cost of goods sold, means it reduces your cost of goods sold. Whereas when we talk about the under absorption, so it's recorded as an expense in cost of goods sold. It's recorded as an expense in the cost of goods sold. That's what happens. So over absorption, under absorption, that is something that we have actually done. Over absorption, under absorption, that is something that we have actually done. Now, so with respect to the overheads, this is always an important thing in respect to the absorption costing, that you got to keep in mind that what's under absorption, what's over absorption. Now there is this last one important technique, which is the marginal costing. Now what exactly is this marginal costing all about? So if I could just recall something, so I would say that when we talk about the absorption costing, the overheads are treated as product cost. Under the marginal costing, what happens is that the overheads are treated as period cost. The overheads are treated as period cost. So under the absorption costing, overheads are treated as product cost. Under the marginal costing, the overheads are treated as period cost. That's where the difference is between the absorption and the marginal costing. Now let's try to understand something. When we talk about the marginal costing is majorly used for the decision making purposes. That is, whenever you have to make certain decisions. So for the decision making purposes, marginal costing is used. Now under the marginal costing, this terminology of contributions, is very, very important terminology. And what is this contribution all about? Simply, when you say your selling price less the variable cost. So whenever you say the selling price less the variable cost, I repeat, the selling price less the variable cost, resultingly this is going to be considered as your contribution. I repeat, selling price less the variable cost is going to give you contribution. Now let's try to understand something. So under the marginal costing principle, the P&L is produced like this: selling price less the variable cost, every variable cost, whether that be direct cost, whether that be the overheads, etc. You get the contribution. From the contribution you deduct the overheads, resultingly you get the profit. From the contribution you deduct the overheads, resultingly what do you get? You end up getting the profit. So that's what happens with respect to the marginal costing. And where do we use marginal costing? So marginal costing is majorly used for the purposes of decision making. What have I done till now? I have actually explained to you people the basic concepts of the cost accounting, so that you could actually so that you do have an idea that what these basic principles are, and then they are actually going to make things easy for you to be able to understand the subsequent concepts.